In this video, we are going to focus on the projected income statement. MM Stores is a clothing retailer situated in Bergville. Required 2.1. Explain the difference between the cash budget and the projected income statement. So actually, the cash budget, what does the cash budget do? So what the cash budget does is it estimates the future receipts and the payments of the business. So this is what the cash budget does. It estimates the future receipt and the payments of the business. And then the projected income statement. It estimates the expected incomes and the expenses of the business. So this is the difference between the two. Okay, then 2.2, complete the debtors collection schedule for July and August. Okay, debtors collection, here it is for July and August. Let's go and look at the information. What did they say about the collection? Now, here they're talking about the collection of the debtors. Debtors are expected to settle their accounts as follows. 50% settle accounts in the month of sale and receive a 5% discount. Let's draw this table. So this one is 50%. For the 50%, they receive a 5% discount. And then there is a 45%. And then after that, there is a 5% of the bad debts. So this one is 5% for the bad debts. Okay. Now, 45% cycle account in the month following the month of C. Okay. Now, so the months that you are given is May, June, July, August. So let's start with May. So if we are saying that May is a month of sale, it means that 50% will be circulated in May. Why? Because they said that 50% circle account in the month of sale. So meaning that if we are in the month of May, 50% will circle in May. And then following that is going to be June and then July. So this means that in the credit sales of May, 5% of them in July will be written off as a bad debt, because they said that here provision is made for the bad debt. So after this month, in the second month after sale, so that the remaining 5% will be written off as a bad debt. Okay. So now we're going to June. So if we are saying June is a month of sale, it means that 50% will be paid in June. Then we're going to have July, August. Okay. Now let's move to July. So if we are saying July is a month of sale, it means that 50% will be settled in July. Then we're going to have August, September. Okay. Now, you need to remember, they said we are doing for, let me check. They said we are doing for July and August, but then so July and August, but then here they provided the column for June, so we're also going to do for June. Okay, so we're doing for July. So this is June, it's already done here. So we're going for June, July, August, July, August. Okay, and then after that we're going to have August. So for August, August is the month of sale. August, September, October. So we're doing for August. Okay, now let's start. So for May, the one for June is already done. This one, it's already done, right? And then 5% is for the bad debts. Okay, we are still going to go there. Right now we are doing a debtors collection. Okay, now for June, the month of sale, 50% will be paid in June. So we are giving the credit sales. So you need to remember, when we are doing the debtors collection schedule, we only focus on the credit sales. Okay, we only focus on the credit sales. So we're going to say multiply by 95% after the subtraction of the 5% from the 100%. So 96,000 multiplied by 50% multiplied by 95% is going to be 45,600. 45,600. That is for June. 45,600. Then we have July. So for June, for the credit sales of June, 45% of them will be paid in July. So we are going to say 96,000 multiplied by 45% is equal to 6,000 multiplied by 45%, which is 43,200. 43,200. So this is going to be paid in July. 43,200, right? And then 5% of the credit sales of June in August, they will be written off as the bad debts. Okay. And then let's continue. So this is May, June, July. And then now September, July. Now we're in July. So for July, we are not given the credit sales. We are not given the credit sales of July, but then we can find them because they said that credit sales account for 40% of the total sales. Credit sales account for 40% of the total sales. Okay. So for July, we are given that the credit sales, the sales, they are 252. Sales, they are 252, right? We are looking for what? We are looking for the credit sales. We are looking for the credit sales. So the credit sales, they are 40% of the total sales. So multiply by 40%, 252, multiply by 40%, that is going to be 100,800. Okay, those are the credit sales of July, 100,800. Okay, now we're in July now. Now in July we have the credit sales. So 50% will be paid in July. Okay, we're here in July. So 100,800 multiplied by 50% multiplied by 95%. which is equal to multiply by 95%, that is equal to 47,880. 47,880. So that is for July. Or sometimes you can just say, if you don't understand this format, you can just say 100,800 multiplied by 50%. How much is that? 100,800 multiplied by 50%. That is 50,400 multiplied by 5%. Multiplied by 5%. That is 2,520. Right? So we want to find it after the discount is how much? So 50,400 minus 2,520, that is 47,880. So you see that it's still the same amount. Okay, now still in July, for the July credit sales, 45% of them will be paid in August. Okay, 100,800 multiplied by 45%. 45,360. 45,360. Okay, now we're moving to August. So we are not given the sales of August, but then the total sales also they're not given, right? But then they said sales are expected to increase by 5% per month. Sales are expected to increase by 5% per month. So this means that you can find the sales of August. So we can find the sales of August. So let's come and find the sales of August. 252,000 multiplied by 5%. 252 multiplied by 5%. That is 12,600. So 252,000 plus 12,600. It is 264,600. So actually, the total sales for August, it is 264,600. Right? So meaning that now we now have the credit sales of August. I mean, we now have the total sales of August. So because now we have the total sales of August, it means that now we can find the credit sales of August because they are 40% of the total sales. So 264 times 40%, that is 105,840. So actually the credit sales of August, they are 105,840. Right? Now let's come back here. Now we are in August. So we have calculated the credit sales of August. So for the credit sales of August, 50% of them will be paid in August. So we're going to have 105,840 multiplied by 50% multiplied by 95%. So again, if you don't understand this one, you can still use this format. Okay, how much is this? Multiplied by 50% multiplied by 95%. It is going to be 50,274. 274. That is for August. 50,274 4, right? Now let's calculate. Plus 45,360, it is 95,634. 95,634. Then for July, 43,200 minus 47,880, mean plus, which is going to be 91,80. And then for June, 41,130 plus 45,600, it is going to be 86,730. Okay, now let's go back to the bad debts. So if you look at here, the bad debts, we are not given the bad debts of July and August. But then here, the credit sales of May, 5% of them will be written off as a bad debt in July. Okay, so the credit sales of May, they are 91,400. So we're here in July, right? So this is D. So this means that you can find the bad debts of July by saying 91,400 multiplied by 5%, it is equal to, multiplied by 5%, it is 4,570. 4,570. And then also, we're not given the bad debts of August, but then above in this table, the bad debts of August. Here, the credit sales of June, 5% of them will be written off as a bad debt in August. So this means that we can use the credit sales of June to find the bad debts of August. So the credit sales of June, they are 96,000. So the bad debt is this one E. So 96,000 multiplied by 5%. 1,000 multiplied by 5% is equal to 96,000 by 5%. It is 4,800. Okay, let's continue. We are also not given BC, the cost of sales. Now, we are given the markup. We are given the markup. The business applies a 60% markup on all goods sold. So if we are given the markup, we know that cost price plus markup is equal to selling price. So right now the markup is 60%. So actually, cost price is always 100. Cost price plus markup is equal to selling price, right? Now, let's come back here. We are given the sales of July, they are 252. We are looking for the cost of sales of July, which is B multiplied by. So below we put what we have. So what we have is the sales, which is the selling price. So the selling price is 160. And then above we put what we don't have. So what we don't have is the selling price. What we don't have is a cost price, which is 100. So 252 multiplied by 100 divided by 160, that is 157,500. So that is D. 252 100 divided by 100 over 160 is equal to 157,500. and then C. So C also we're not given, so we're going to use the sales of August to find the cost of sales of August. So 264, 600. We are looking for the cost of sales. So we're going to say 100 over 160, which is equal to 264, 600 multiplied by 100 divided by 160. It is going to be 165, 375. Right? Now, let's continue. We are not given the salaries and wages. Let's go to them, which is letter F. What did they say about the salaries and wages? The business currently employs one manager at a gross salary of 15,000, okay, as well as two shop assistants who are paid equally, okay. So meaning that this business is employing 3 employees at the moment: a manager, 1, and then 2 shop assistants, okay. The business plans to employ a third shop assistant from the 1st of August at the same rate as the 2 current shop assistants. Okay, how much is given for the salaries and wages? That is 31,000, right? So the salaries and wages right now in June and July, they are 31,000, right? So we need to know that how much is a wage of each shop assistant. So to do that, we must first separate the gross salary of the manager, which is 15,000. We want to know that these 2 shop assistants, they are earning how much. So we must first separate the salary of the manager. So what is left is 16,000. So because we only have 2 shop assistants, we are going to divide by 2, which is equal to 8,000. So this means that each shop assistant is earning 8,000 rand. So this means that the salaries and wages in August, they are going to increase by 8,000 because this third assistant is going to earn in the same rate as other 2 shop assistants. So this means that we are going to add the 8,000 rand here, which is 39,000. And then G. So now what is she saying? Sundry expenses. So sundry expenses, they are 6,760. So what did they say about them here? Sundry expenses, they are expected to increase by 200 from the 1st of August. So here in August, they are going to increase by 200. So this means that you are going to have 6,760 plus 200 because they are increasing. So this means that now they are 6,960. And then after that, we have H, advertising. So what are they saying about the advertising? Advertising will remain fixed at 3% of the sales. So they're saying that advertising is at 3% of the sales. So the sales of July, they are 252, right? So we are here right now. This is advertising for July. The sales of July, it is 252. We are told that the advertising is a 3% of the sales, right? 252 multiplied by 3%, that is 7,560. And then now the advertising of August, so which is the sales, they are 264, 600 multiplied by 3%, 264 600 multiplied by 3%, it is 7,938. Okay, what's next? The depreciation. So what did they say about the depreciation? The next point, the current fixed deposit of 210,000 at an interest rate of 5% per annum will mature on 31 July 2019. So what is going to happen to the interest now? This means that now we are no longer going to have the interest on fixed deposit. So see, this is S&5. So this means that we are no longer going to have the interest on fixed deposit because the current fixed deposit of 210 at an interest rate of 5% will mature on 31 August 2019. So this means that now we are no longer going to have the interest. So this means that here in H, we have a zero interest because we no longer have a fixed deposit. Okay, now then they are saying that 60,000 will be withdrawn to purchase an additional equipment on the 1st of August 2019. So on the 1st of August 2019, there will be a new equipment. There will be a new equipment which is 60,000. So 60,000 multiplied by. So now we are looking for the depreciation. So the depreciation is this one in letter J. Depreciation for August. So we are told that it is 20% per annum. Multiplied by 20%. So we are calculating only for 1 month. So multiplied by 1 over 12. Because we are calculating for only 1 month. Multiplied by 20% times 1 divided by 12. That is 1,000 rand. Right? And then they are saying that the business has an equipment valued at 126,000 on the 1st of June 2019. So at the beginning of June, the business had an equipment of 126,000. So let's calculate the depreciation for this equipment. 126,000 multiplied by 20% multiplied by 1 over 12 because we're calculating for only 1 month. So 126,000 multiplied by 20% multiplied by 1 divided by 12, it is going to be 2,100. So if we add these two, they're going to give us 3,100. So that is our